Hey guys, it's Simon with ToughTrader.com. It's a preview for the week of what I'm looking for uh, to uh, uh, to be successful for the week coming forward. I often want to have a good idea of what to expect for the week, so I can set my expectation, so I can set my trading expectation to what I am looking for. Right? If you come in expecting a fast market and it's a slow market, are we in balance? Are we looking for a directional move? Etc. So this is my attempt at doing that. So remember, guys, my job is to share my trade plan with you in hopes it'll make you a better trader. However, right, and important, don't follow me blindly. Don't follow anyone blindly, right? Find a way to set up your own trading process. You can get help, get a mentor, uh, but find a way to get a trading process that fits within both your emotional ability to handle risk, your mental ability to handle risk, your financial ability to handle risk. Too many traders come in trying to find the magic bullet of getting rich overnight, right? And so another trader I know said it very, very well. People will spend literally hundreds of thousands of dollars on a college career for a chance to make 60, 70, $80,000 a year, right? And they'll spend 4, 5, 8 years developing that career, right? Trading is one of the most difficult endeavors you can have. There's a very low success rate, right? And the reason why is people are simply trying to get rich overnight instead of finding a way to get consistent in their trading. I believe the consistency can be done. I've done it myself. However, right, you have to work at it. My three key suggestions are: find a mentor, find a room or a trading group that fits your trading style, right? Come in with a outlook of learning every day, learning what the market's trying to teach us, right? And then be humble, right? Because the market will take your money away just as quickly as it'll give it to you. So before we get started, really quick, I know I'm in my new office and I don't have everything quite prepared, but I'm going to fix that right now. Give me just 1 second here. I just have to get this legal disclaimer up. And I will have it right here, and it should flash up for us in just a second. And here we are. So past performance is not indicative of future results. You can lose a lot of money trading futures. Make sure you have a risk plan. You can lose every penny and more that you put into trading futures. Know what you're doing. If you're not emotionally stable, don't trade. My number one suggestion. It's just too hard, right? And the more pressure you put on yourself to make money immediately, the more likely it is you will draw down. And then the last piece is, don't jump from trader to trader hoping for a miracle. Go and learn how the process works. And that's the easiest way to make money consistently. So, number one, to get started for the week, let's go take a look at the profile, right? So on ES, we have an interesting dichotomy here. What you're going to see is on ES, let me erase all these lines, right? And what you'll see is we have fallen into a range, right? I'm going to try and keep this short, but basically, very simply, this is the top of the range at 2741, 2740. Let's just call it 4042. This is the bottom of the range, 2700 to 2705. Until we get out of this range, meaning we manage to make an upside break or a downside break, expect continued balance on most days. And what you'll see is we push down, we push up, we push up, we push down, right? We push down, we push up, and we just get a bunch of slow, grindy markets, okay? That can be frustrating, and who this market is frustrating the most are the guys from earlier in the year and all of last year who are used to the market opening up, gap ups going higher, right? Every dip can be bought. Once you buy the dip early in the morning, it continues to rotate higher. That no longer is the case. This is what the market does the majority of the time. It balances. If you'll look, yes, it does make vertical moves every once in a while, but the majority of the time the market's in balance. And so what does that mean? What we're looking for is the edges to find places to execute. Now in the room, we do that multiple ways. First of all, we look at the size of the trade rotation. Secondly, we look for key levels, right? And our key levels, I post them up for members of the room every night, but they usually surround areas of high volume and or very low volume pockets. And we're looking for places on the chart, on the profile. If you haven't read Mind Over Markets, I highly, highly, highly recommend it as a place to start. But if you haven't read Mind Over Markets, I suggest that you go and read it and look for a way to understand how the auction process works and what the market is trying to do when it repairs. So heading into last week, what you can say is we are building a boatload of energy, right? And you would look for a break in this up or down. Let me show you a market that looks very, very similar to this and had that very break. I'm going to show this to you right here. This is the CL market. And let me just duplicate this chart and erase all my lines. Those are the areas I am looking to trade out of. And what you get, you see that, is you see how we had this massive move over 2 days? Guys, sorry, I'm here. I don't have my mouse quite set up the way I like it, so I'm stumbling a bit. But what you'll see here is, obviously we've been in a very, very nice uptrend. But see how this area here got drawn out for a really long time, right? You can see this is our first really long basing period where we did about the second half of April, right? Then we got into May. We attempted to break out, and then we got into this just really tiny trading range, right? See how it got really small and then expanded really big? So there's a couple of things to recognize in here. In CL, which is oil, the first thing that you'll notice is that if we go back a couple of days, which we're going to do here, the blue lines and the purple lines that you see there, those are naked volume points of control and naked TPO points of control. Without going into an in-depth explanation of what those are, they simply are very strong points of interest. But when you get a chart that has no naked points of control, naked means they have not been backside checked either from the downside or the upside, you end up with what tends to be big air pockets. And in the room, I had pointed this out on the 22nd or 23rd that we just had this huge air pocket between 70.70 and 67.60. There just wasn't any clear support. These are areas where you will find strong support and resistance areas coming out of these levels. Okay, so there's an air pocket. The reason why that's interesting is if you look on ES and we erase all these lines, and we bring this in like this, what you'll see is that we actually don't have a lot of air pockets. We clearly have an area of resistance above. And again, I'm going to keep this focused on ES for the most part. But you'll see that 27.34 to 27.36, that's your first upside resistance. On the downside now, it's a little bit different. We are currently trading in the Asian session below 27.19 to 27.21. And if you'll notice, if we can squeeze below 27.20, there are no naked points of control behind here all the way to 26.95. Now, I would normally say, given where we closed on Friday, and not counting today's trading range, it was holiday trading. It was almost all Globex and light volume. That 27.19 is still valid for area for support. They'd like to see that hold. However, if it gives, the natural location would be 26.95. Now, it doesn't mean that the market can't pick some other area to reverse, but that is both within range because it would be a 20-point range. ES has shown an average of 20 to 25 points, right? That would be number one. It has shown an ability to get 20 to 25 points up and down, right? So this is totally within range of hitting it, and I would expect a response here. If we don't get a response from 26.95, if you'll look, that sets us up to retest this date right here, which is the 9th of this month, right? And what you'll see is there's an anomaly right in the middle. I would usually expect a response there. And so if it hits it tomorrow, right, if we get down to that 26.87, if it hits it tomorrow, I would expect a response back up in an attempt to try to grab 26.95. However, right, that's not strong. It's just a big stretch. So the more likely scenario in my mind, which I paint these out, is that we would get a move down to 26.95 if we get weak and responsive buyers back up, maybe a little bit past 26.95, but in this area in general, and then a response back up. Failure to get back up, a close below and to find this resistance would then bring up a test of 26.87. That's a weak area. I do expect a response, but not necessarily a reversal, particularly depending on how the sequence goes. If the sequence goes, we close at 26.95, then this is in danger. It's only a 10-point stretch. And then that brings up ultimately 26.63, which would be a huge stretch from there. It'd be 30 down. And I would expect a response back up to retest 26.80 and 26.95 from there. The important thing in this area, and a lot of a lot of traders will miss this, is that there are naked points of control underneath that need to be tested. But if this gets blown out right here, this is really your next stop on that roll down. Now, I don't expect it to get blown out, but that's where I would switch over to the 5-minute chart and the algos to look for entry and exit. I hope that makes sense. It's the best way I can describe it. It does not look as bad as oil looks. We have been building an awful amount, a large amount of energy. Now, here's where the area on ES is confusing. If you look at NQ looks like it wants to continue to break out. That's NQ's chart, right? But if you draw that together, notice how many times, I'll erase this really quick. Okay. Notice how many times NQ kind of does this, oh, hey, we're breaking out job. I wonder why this chart is running so slow. That is just odd. See if we can stretch this out a little bit. Totally locked up. The computer's trying to do something here. There we go. Let's try this one more time. Wonder what is logging this down, but we'll give it a second to catch up here. There we go. Caught up. Let's see if that does it. And let's see if we can stretch this out just a drop. There we are. What you'll notice, hopefully this works. Nope. Okay, I'll just point to it. There we go. Each time we tend to make a breakout to the upside, this NQ tends to kind of do this peekaboo, like, hey, we're breaking out. No, we're not. Hey, we're breaking out. No, we're not. And it does it repeatedly. You'll see here again, it gapped up. It looked like it was going to break out. It rolls back down. It loves to suck traders in right on the edge. I don't know why it does it, but it does it consistently. And if you can learn that pattern, right, there's an awful large amount of money to be made. What it seems like what every NQ trader is looking for is this break, like what we had in January and February, where it just keeps grinding up and up and up, and they get mega bullish on it. But if you really look at that pattern and what we've been doing, yeah, we're building energy, but what this has done more consistently than anything else, and I don't know why this, there we go. It's responding now better. I don't know why it got locked up. But what you'll really see in this market more than anything else is it loves to look like it's breaking out and then just rolls back down really viciously. It just keeps sucking people in at the very top of the market. And you'll see again, we're testing over the weekend this 7,000 level, and we're currently trading at 69.71. When I look at this chart and then I compare that to the ES chart, which is right here, right, and I kind of see ES hasn't been going with it, and it's trading sideways. My real thought process is, hey, unless we really establish outside of this 7,000 level, we're just playing peekaboo with a new high, and then we're just going to suck everybody right back in. And to me, it looks like we have a strong chance of coming back and testing this bottom level. So what would be my first clue that might be happening? When I look at NQ, I see that we're one-timing to the upside. See how we can't trade below the prior day's low? So my first clue wouldn't be to look at today's low, because today was holiday trading, but to look at Friday's low right here. And if we can trade below Friday's low right there at about 69.39, 69.40, which again, that's only 30 points away from where we're trading right now. If we can manage to establish underneath or hold underneath, my first assumption would be is we're going to come down to the bottom of the trading range at 68.62. That'd be about 100 points down, and it's completely doable by NQ. Again, I know this is boring when you look at it this way, but really those are the pieces that you're looking for to get an idea. If we get below that 69.40, and then you think, well, what would happen to ES switching back? Well, ES is probably going to be back at 2,700 to 2,695 with that same breakdown, right? If we get below 2,695, that's what could really accelerate it. And what would really be helpful there is if when we walk in tomorrow morning, we're actually trading at 2,695, that would accelerate that picture to the downside. Again, I'm not looking for a breakdown, but the market just hasn't been very strong to the upside on ES. Conversely, what would I look for a breakout? If we can establish above 27.40 to 42, right, I would look for any downside weakness as long as it held that 40.42 or a push to the upside. And if ES were to manage above 40.42, then I would look for a continuation on the upside in NQ and a continued breakout. But right now, it's all the FANG stocks are breaking out, and this tells me nothing else is following it. And even more interesting, it looks like this North Korean summit is on, and the market's just kind of shrugged it off and shrugged its shoulders. So everyone seems to think we'll have a pretty quiet summertime. I think we'll have wide ranges. So what's ruled the roost? I want to cover one more thing before I drop off tonight. And when you go and look here, what's the easiest way for me to do this? This is the easiest way for me to do this. Chart. And I do this exercise with my new coaching clients. I think it's pretty important if you don't know about it. It's one of the first things I make people do when I coach them one-on-one. And I'm going to show you right here. Turn this into let's use a 10-minute candle just to make it easy. So this will not make you instantly profitable, but it will help you locate trades in an area where you have at least a decent chance if there's other structures or areas in the market to help you get a counter rotation. So I want to show you, see this big rip down here? Look at the cycle that it went through. Here, I'll just count it with you. The high was 27.33. So go look at 27.23, ripped right through it. 27.13. See how at 27.13, we got an attempted response or nearby there, 27.14. And then finally, 27.03, we didn't quite make it down there, but that would be right here. But what this does is it starts setting up a grid for you to follow on where you're going to look for rotation and counter rotation. And what I suggest people do, this is pretty easy and most people can do it, just take the low, right? And if you'll just draw 15 points up, see how we came off the low and we went up to 27.15. It backside tested 27.15. See how they rejected right in front of it? You can see the wick there. They pushed above, backside tested. Then you go to 27.25. See how 27.25 got you in the neighborhood? See how they rejected right off of it? A little bit above, a little bit below. Finally, 27.29 was the high. If you draw from 27.29, right, just keep doing that 10-point rotation. You'll see what I'm talking about. From 27.29, if you come in and you pop into 27.19, okay. Did it give you the low? No, but it got you pretty darn close. If you look from that low at 27.16, popped up to 27.26. See how we had the rejection right there on 27.26 from 27.19? And you're going to constantly kind of wash and rewash this process over and over again to get an idea of where your trade location is. Now, sometimes this works magically. You'll come to 27.17 and you'll see 10-point rotation. You get a small counter rotation. And if you're patient with it and you can get tick divergence, key location, support resistance area in this area, you will find that you can generate some pretty nice counter rotations. And it's just not here. It's almost everywhere on the ES market. Again, if you'll look here, I like looking at the larger rotations to figure this out. So if you'll look on that push up, right, just grab a straight line, go, okay, look how it responds every 10 points. So this is 27.10. You can see we were rejected the first time we get to 27.10. 27.10 brings up 27.20. Okay, so you can see right in front of 27.20, we rejected 27.20, then brings up 27.30. And then there's variables on there, but you can see from that swing low, every 10 points, we tended to get a counter rotation. And then you can make that more complicated because then you can look at the swing from the low to the next swing and so on and so forth. But I try to go for major swing highs and major swing lows and grab every 10 points. If you are struggling in your trading and you are looking for a way to understand how ES moves, there's nothing magical about 10 points. It's not like you'll automatically make money every time. When range expands, it goes from 10 points to 20-point rotations, right? But this is the basic lattice to understanding how structure functions up and down in ES. And whenever I have a coaching client, again, you'll see it here. Here we can start it again from the top to the bottom. So you get your swing high at 27.41. And then if you just marked off all the way down, watch how it responds. There's 31. Here's 21. We obviously traded straight through there. Here's 11. and here's 01. Okay, now if you look at that, you go, but Simon, it busted all the way through there, right? You look at that and go, if you took it every 10 points, right, it just traded all the way through there. That's true. There's no question about that. But if you look at it the other way, what you'll see is, okay, here's my first 10 points. I expected a response there. I didn't get it. Backside tested, rejected. I expected a response here at 21 and a quarter. Well, that was a pretty big stretch by the time it got there. But if you see, as we approach 21 and a quarter, rejected again. Why? We traded straight through. If you'll see this 1150 area, we busted straight through it. See how when it backside tested, it wicked into it and pushed lower. And then when it backside tested it again, it tried to get above. There was resistance there. And the reasons there's resistance here is because I'm not the only guy on the face of the earth that knows that 10 points are pretty important trade areas in the market. And what happens is when these areas get busted, traders put money to work there, and then they're like, oh, I'm stuck. So when it comes back to backside test that area, guess what they do? They sell it. But as a rule of thumb and in general, I can look almost anywhere in this chart. Right here, we'll just draw it back randomly here a little bit. We'll go back to 4.9. This is fine. And if I look from the top to the bottom and I look how this market responded, I can go 72 to 62. I got a response. I can go from 62 and I can go to 52. And you can see we gapped through there and ran underneath. It became resistance. 52 brought up 42. And that generated a response when we finally got to 42. 42 brought up 32. And you can see again, it held, and you can see from the wicks that they attempted to hold that 32. 32 brought up 22. You can see we got a response from there. Then it got ugly. 22 brought up 12. So notice that, see how that 12 got straight out busted there? See how they came up on the backside of it and tested and rejected out? 12 brought up 02. And you will see at 02, we got a response. And finally at 02, brought up 92. And you can see from 92, we got a response. And then finally 82, which never quite got tested. But if you look at that framework, both up and down, you will find that 10 points pitch you in the area. And then you're looking for what we use either in the room, the algo, or you're looking for areas off, preferably off the TPO profile. And that's how you're building a trading program, right? That keeps you from trading these little 3 and 4 point rotations. It lets you know where you can look for key rotations outside of where you're trading. And it also gives you a place to look. I find a lot of new traders are looking like this, like they're looking at the market and they're going, oh, let's say the market opens here and they're like, I want to short for whatever reason. If you wanted to short, right? Well, if the market opens at 27.71 and a quarter, if you come up here and you go, okay, well, where's 21.81 and a quarter? Well, you'll see you got a little counter rotation, 81 and a quarter. And then if you pull it up to 91 and a quarter, see how you got a little counter rotation there? So even though this is trend day up, what that does is spreads out your trades so that you have a decent shot at getting a trade that'll work instead of trying to short every 2 or 3 points and getting absolutely annihilated and run over. Anyways, my name is Simon. Hopefully the audio was good on this. If you liked the video, if you'd hit the like button, it really, really helps with the customer service on YouTube. Importantly, the membership rates in the room are rising at the end of the month. They're going from $99 a month to $199 a month. If you'd like to join me before the end of the month, send an email to tradertough@gmail.com. I'll extend you a 5-day pass, and anyone who gets the 5-day pass before the end of the month, that rate will be extended until your 5-day trial is over. This is a great value. There's no question in mind. We have a great room with a ton of experience and traders sharing with one another, plus the algorithm, plus the levels. I'm pretty sure it's the best value at $199, hands down. And at $99, it's just mind-blowing how good that deal is. So at any rate, trade smart. Don't lose your money. Know that most people fail, and most of the BS you see on Twitter and StockTwits is not true. You do not see guys ripping it all day long. Most good traders have 3, maybe 4 really good trades a day. If that, they know how to bank their money and they don't give it back. Let that become who you are as a trader. That's how you stack chips. Have a great night, everybody. I will see y'all in the morning.